Hi folks, this is Lee Gettess with the Market Sense for the week of September 4th, 2012. We had Monday and Tuesday this week. All the charts we look at come from the Trade Navigator software by Gettess Financial Technologies. First chart is a weekly bond market, and of course with just one day so far, not much has happened here. The support here, the red line, the upper moving average, is right around 150.20. As long as they hold that, it looks like they want to move higher up into this projected high area here, which is around 152.20. There's nothing to stop them from going up to the upper Keltner channel at 154.08 if they get excited. But by the same token, if they were to break down to the middle moving average here at 148.30 or even all the way down here to 147, you can see that wouldn't really be terribly negative. They wouldn't be breaking anything at that point. And as I've been pointing out, this entire sideways pattern here has all taken place above the old highs going back into last year. So it's still a relatively bullish pattern, although it's possible that all of this is just one big distribution that they're going to roll over out of. But at this point, it still looks like they could go higher, and of course breaking 150.20 and heading lower would be the first indication that at least that's not happening immediately. And they're keying on the ECB meeting Thursday and the monthly employment Friday, so perhaps nothing will happen until then. Now in stocks, we're awfully quiet here also. In fact, we've got support here at the red line down here is about 1395, and the middle moving average, the green line, is 1408, and that's essentially what they've done so far this week. It sure would suck if that's all they did, but it's possible. It looks like they could go up into the 1418 area, or even the old highs at 1425. I think they could hit that and take it out. In fact, I'm hoping I can see that. We have very low volatility here, and that's usually not the way tops come in. It takes some volatility in most cases to make a high. If you go back and look at how they behaved in April, they were climbing up very slowly, and then the volatility picked up. And the wider range bars is what created the retest in the high here that they broke down from. Obviously, we're back up there again, but that's kind of how a high forms. It's a little too quiet for a high to form normally, although there isn't anything to say that they can't just get tired and roll over and die here. Obviously, if they do that, we've got the mid-Keltner channel down here at 1365, which would make for an interesting target. Of course, if they go down that far, still well below the previous swing low, so not necessarily any real damage done there. And this market also is kind of geared towards what's Draghi and the ECB going to do, and then what's our monthly employment report look like. So we may just be on hold until they can hear something wonderful at the end of the week. And it will be wonderful, isn't it always? So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.